Warren Buffett sold half its largest holdings, the Apple stock, and as a result of that, his total amount of cash and cash ratios is at the record high. Does he see something that we, the average investors, don't see? And is he trying to avoid a recession? On August 2nd, Warren Buffett's Berkshire Hathaway reported its quarterly report, and he dumped nearly half of its Apple stake in the last quarter, which is surprising to us because he is known to be a long-term investor, and this sort of big movement is kind of telling us he's somehow timing the market. And this is a snippet from its 10Q report, as we can see in the previous quarter, so the quarter before this earnings report that ends December 31st, 2023, his Apple holdings was valued at $174 billion. And for this earnings report, which is received, which ends on June 30th, 2024, his Apple shares is now down to $84.2 billion. And it's still its largest holding for Berkshire Hathaway. One thing to note is during the previous earnings report, which is this quarter over here, he sold 13% of Apple, and Buffett's excuse was that that was for tax reasons. But now, in this latest quarter, he sold another 50%. So that's pretty insane, okay? And in total, Berkshire Hathaway currently have $285 billion worth of equities or stocks. This chart shows you Berkshire's holding in Apple stocks. The unit is millions of shares. And as we can see, that's the latest quarter they reported. And of course, the actual number of shares was not reported. We only have the dollar value. So this number of share here is an estimate. This chart shows you Berkshire's net purchase or sales of equity securities in billions of dollars. So there was a huge selling, right, in this quarter, which is the one they just reported. And one thing to note is that in the past 7 quarters, Berkshire has been a net seller for its equities. The detailed transaction for this latest quarter will be captured in the 13F form. It should be released in the near future. So let's talk about cash. This is another snippet from the 10Q report. If you add the 3 red lines here, add them up, that's going to give you the total cash plus cash equivalent plus short-term treasury bill investment of Berkshire Hathaway. And we can simply call them the cash and cash equivalent because these 3 items are either cash or they're very liquid investment. So when you add them up, we have $277 billion worth of cash and cash equivalent for Berkshire. And that's very close to the amount of stocks or equity they have at the moment, which is $285 billion. This chart shows you the total cash and cash equivalent value of Berkshire Hathaway. That's the latest quarter. Look at that. This data comes since 2010 all the way till today. And right, it's an outstanding amount of cash they're having right now. But I think what's more important than total value of cash is the ratio of cash, or I call it the cash ratio. So it shows you how many percentage of its total portfolio is in cash and cash equivalent. And currently, as we can observe in this chart in the green line, in its portfolio, 47% is cash and cash equivalent. So pretty much at 50%. And if you look at total amount of equity, which is stocks, it's at 50%. And of course, there's a couple percentage of whatever long-term bonds or fixed income. So that can be ignored. So the portfolio is pretty much 50-50. So half of it is cash, half of it is equity. That's pretty insane. Just to show you the magnificence of this, if we take the same chart and we zoom it out, as we can see, this chart goes all the way from 1995 all the way till today, and that's all the data I have access to. But the current cash ratio of 47% has never been this high before in history. And since we have the chart open, 2 data points we can observe is that previously the 2 times that the cash peaked was first time in 2004 that the cash peaked at 42%. And the second time was March of 2020 when the cash peaked at 40%. And again, we're currently at 47, and that tells us that Warren Buffett has never been so worried about the market before. So what does Warren Buffett use to gauge the bubble of the market or the fair value of the market? I think we probably have to look at the Buffett indicator. Why? Because Warren Buffett invented this indicator. It pretty much used the total market cap divided by the GDP of the country. The indicator is shown in the blue line, and the red line is S&P 500 price performance as a reference. And I have drew these green trend lines to help you understand where the Buffett indicator is. So maybe Warren Buffett thinks that the Buffett indicator is a little bit high. Maybe he thinks the market is a little bit overpriced. Well, I shouldn't say a little bit because he never had this much cash before. So maybe he thinks it's very overpriced. But having this trend line naturally go up is okay because since 2008, central bank has been printing money, right? They unlocked the ability to do QE. So naturally, we have a inflation of uptrend because money becomes less valuable. But maybe based on the trend line, he think we're overpriced. But it does not matter what the reason is because he may make up some reason in the future. Once the media catch up to him, he probably say it's for a tax reason or whatever stupid reason. But what's important is action, right? Action speaks louder than the words, and right now we're seeing something that he has never done before. That's all I want to share with you today, but I'm curious about your opinion. Please let me know in the comment section below regarding the following questions. What do you think his reason is for selling such a large portion of Apple and hoarding historically high amount of cash? And is he expecting a market downturn, or is there any other reasons that average investors are not seeing? And another question is this going to affect your own personal investment strategy? Are you considering increasing your cash holdings for your personal portfolio? Thank you very much. Please don't forget to subscribe. Bye.